this is a more unconventional data set, but the prediction markets that have become very popular lately.
I would totally agree. Ara, yeah, the market has like millions of participants. And so to think that like one business of 10 or 20 or 50 or 100, 5,000 people is smarter than millions of participants is kind of like, I don't want to say it's a fool's errand, but
There's another similar question. Which metrics should finance leaders be tracking more frequently during periods of economic volatility? So I'll say one really funny one recently has been the bond markets. Everyone should always be, I mean, if you're a finance leader, you should always be tracking the bond markets. But what's been very funny about tariff policy lately is if you saw a couple weeks ago, the bond markets kind of went nuts, and tariff policy very quickly responded to the bond markets and calmed down a little bit. And so we know that the administration is certainly watching the bond markets, very conscious of that. I mean, especially recently because the main concern right now is the U.S. government debt, interest we're paying on that debt. Bond markets explode. That's going to blow up our debt as well. And certainly matters for business, but now we know how much it matters. It's hyper important right now from a policy perspective. Also, one of the really interesting things that's been going on, if you want to know how policy is going to go, this is a more unconventional data set, but the prediction markets that have become very popular lately. So prediction markets, as in like you can now bet. They've securitized bets on whether or not the Fed is going to raise interest rates. I guess that was always kind of securitized, but they've now securitized bets on like, oh, will Congress pass the tax bill? You couldn't bet on that previously. And I wouldn't suggest anyone bet on them, but the prediction markets are really interesting. Like Kalshi is one of them. You can actually see a pretty interesting measurement of the likelihood of those policy changes happening. I mean, look, it's just people betting on something, but if you believe in the power of auctions and markets, and information that is available and out there, and the law of crowds. It's a really interesting way to build in like probabilities into your model and forecast.
I would totally agree. Ara, the
It's
market
a new
has
one. A lot of people aren't using it yet.
Yeah, the market has like millions of participants. And so to think that like one business of 10 or 20 or 50 or 100, 5,000 people is smarter than millions of participants is kind of like, I don't want to say it's a fool's errand, but the market tends to be on the margin a little bit smarter than any single individual. And so, some of the things that like we look at are like volatility indices. So rate vol, equity markets volatility, and volatility in the corporate bond market as well, like investment grade and high yield markets. You can impute some like probability that a certain subset of businesses will default from those levels. And so in Liberation Month or week or 2 weeks, whatever time period we want to call it, those levels were massively elevated. There was a lot of fear. The market was saying something. It doesn't mean the market's always right. It just means there was an implied view of a collective body of millions of people. And those things can have real impacts on businesses. Like if a business needs to go out and raise capital and they need to go to the corporate debt market, or a business is trying to raise equity through like VCs collectively and equity volatility is through the roof, there might be better returns in public equities than there are in buying like a private company, even though those markets aren't necessarily perfectly correlated. And so like those indicators can just indicate a lot of stress to get capital and funding, and can actually put an end to a lot of business endeavors. So we watch those very carefully as a sign of stress and what the market is thinking.
We're going to talk a little bit about AI. We're going to talk about what's propelling the U.S. economy right now. We're going to talk about some of the policy frictions that are causing some headwinds in those sectors. We're going to talk a little about geopolitics, how it's going to fuel growth, how it's going to be a headwind to growth. And then we're going to go through some data, talk about which sectors are doing well, which sectors are not doing so well, and talk about how that's going to affect our top line numbers in the U.S. economy.